I'm here in Brussels with Martin Weissburg, the president of Volvo Construction Equipment. Martin took up the job at Volvo Construction Equipment at the start of 2014. So Martin, what have been the highlights of your first 9 months in the post?
The first 9 months in my position as the leader of Volvo Construction Equipment, very much as anticipated. I've been, of course, a member of the Volvo Group top executive team for almost 10 years now, very familiar with Volvo CE as one of our core businesses. Mm-hmm. So the transition for me personally was quite easy. Things I didn't anticipate that were very, I would say, pleasant surprises, even more so than I would have guessed, is the quality of the team here at Volvo CE around the globe.
In terms of the global market dynamic at the moment, the impression I get from Volvo's financial results and from other companies in the industry is that North America is coming back, Europe as well a little bit, but that there is weakness in the emerging markets. Would you say that's a fair assessment, and how do you see things shaping up for the next couple of years?
I think it's a fair assessment. North America has come back. It's not just that it's coming back. And sitting here as we are now in September of 2014, there's has been very good progress and growth for manufacturers, distributors, and contractor fleet expansion, and a lot of good work being done on projects in North America. If anything, it might even start to flatten out a little bit next year. But I think North America is seeing a terrific period of growth and economic stability, not just oil and gas driven, although that certainly helps also. So we've seen utilization rates of the equipment continue to strengthen, dealer rental fleets, higher utilization, and our customers, the end users, the contractors, not just in the replacement cycle, but in the expansion cycle for their equipment. And so it's a good, stable, important market that's even more stable and with decent growth. And I think even if in North America, if it maybe even flattens a little bit next year at a higher level, so which is quite good. Europe, it's a tale of many different Europes, and with some of the political turmoil and challenges going on, hard to forecast where that will be. Parts of Europe remain extremely strong, other parts still working their way out of even from the great global recession. But again, all in all, and some softening even since the summer months. So a mixed story there, but generally I'd say quite good. And then, as you say, the emerging markets, after many years, not all of them, but many of them of having strong continuous growth, are growing at much lower levels, some even contracting. And we say growth, it's unit sales of construction equipment compared to prior year month. Brazil, not growing as quickly as it had been, but still a very robust, dynamic market. Russia, we know the challenges there, so some interesting opportunities still. A market that we're extremely committed to, as is our distribution there. South Africa down a bit, Turkey down a bit. China's really been the bigger story from the emerging markets, and you could say that China had such a long period of very strong, rapid growth year over year, 2009, 2010, 2011, even into 2012. A lot of government stimulus, strong availability of credit for distribution and customers, and you could argue that it was overstimulated and oversupplied. And like most markets now that go through a cycle, China's experiencing this down cycle, and it's one of the it's probably the deepest, more severe corrections that the Chinese construction equipment market has seen. And this is part of the natural maturation process, in my opinion, of any geographic market. For Volvo Construction Equipment, China remains one of our key markets, one of our most important markets. We're leaning into China. We're the market share leader there, both brands, SDLG and the Volvo brand, and it could continue to invest in China. So while China's had this correction, it's still a very, very important place and will show significant opportunities in the years to come.
You mentioned there about how you have a manufacturing footprint in China now, and of course over the last decade your manufacturing footprint has grown in India, Russia and Brazil. From your point of view, do you cover the world enough now, or are there other emerging markets where you feel you need to build a factory to get closer to your customers, or is the footprint complete?
The footprint, excuse me, I wouldn't say that it's complete, but it's very good relative to where we're located. Our industrial footprint is always going through evolution and changes as the markets change, not just with business cycles, but as we want to increase local content. So even within a country, our industrial activities may change as we increase local content and purchasing components and whatnot. But I would say that our coverage today from an industrial standpoint is where we want it to be. And as you stated correctly, we invested quite well and significantly over the prior 3-4 years to ensure that we had the industrial capabilities in these markets, in Brazil, in Russia, in India, in China, and we're very glad we made those investments. Because again, those are long-term investments. So even as the BRICS or the developing markets are lower rates of growth now, in fact, the mature markets, showing better growth, we're in those markets, for many business cycles, not just for one.
Machines built under the SDLG brand by your Chinese joint venture started out as machines for the Chinese market, and then they were rolled out to other emerging markets, and now you've reached a point where you're selling them in North America too. So I was wondering if SDLG is going to become a global brand, or if there are some places where you don't see the potential.
By virtue of our two strong brands, third brand now with Terex trucks as well, we have the benefit then of approaching the market from a cost benefit feature value orientation. It's a very important part of our strategy and has been a successfully executed part of our strategy, even with some of the reductions in end user demand. So we don't see too much risk of cannibalization, one brand against the other. I'm sometimes asked also, am I worried about too much Chinese exports having a negative impact on pricing of, let's say, the Volvo brand? And the answer there is no, because we're the leading Chinese exporter of construction equipment. And this really is our strategy. And there is, quite purposefully, enough brand differentiation that we're able to bring in new customers. Some of them are the same customers, but with different needs.
So just to talk a little bit about the Terex Trucks acquisition, this was announced at the end of 2013 and completed this year. Could you just tell us a little bit about how that's progressing now? It's being integrated into the Volvo construction equipment family, and what some of your ambitions are for that product line.
Our acquisition of the Terex truck business, we announced December of last year, and we closed on the acquisition June of this year, June of 2014, and the acquisition is completed, and the integration is more than well underway, because we started the the integration planning, way in advance. This is not the first time we've done this, of course, so we knew how to plan and how to integrate. And it's been a very good fit and a very smooth integration.
And regarding the Terex articulated trucks, that was something that was maybe a little difficult to understand behind the rationale, because obviously the Terex line mirrors a very long-standing and successful line for Volvo. And the statements that have been made, to paraphrase, say that the Terex articulated trucks are seen as having potential in emerging markets. Could you just explain how you see that potential and how it's going? Because traditionally they have been predominantly a European, North American kind of product, and haven't travelled too well into other parts of the world.
The industry leader of articulated haulers, we feel we know the business pretty well, and so that's very purposeful that our acquisition of Terex trucks was not just the rigids but also the articulated haulers. And we want to grow all of our business, all of our brands, including the Terex truck brands, articulated haulers and rigids. And throughout the business cycle, including this current period in the business cycle, Terex articulated haulers are doing quite well. And there's a significantly well-established market segment that, of customers who seek that product. So our goal now is to continue to embrace those customers, support that distribution, and continue to drive those sales. It's a sizable market. There's plenty of room for both of our brands of articulated haulers. One is not cannibalizing the other. They didn't overlap that much from a customer standpoint prior to the acquisition, and they don't again still today. So we're quite happy with the product positioning, even in the traditional historical Terex articulated markets. It's a good business.
And the acquisition, of course, included rigid haul trucks up to about 90 tons capacity. Is that something that's opened up new customers to you, or is it more a case of you can just offer more to those customers you were already in touch with in applications like quarrying or very big construction haulage applications?
I'd say both. There's a existing Volvo CE, maybe to a lesser extent SDLG existing customers who are already users of rigids of that size, and so we're able to sell to them now as well. And there'll be new customers that we bring in. So for us, it's a portfolio expansion that had been in our plans for a while, scratches an itch of some of our existing customers, and then allows us for those new customers or the existing Terex customers that maybe don't have yet Volvo brand or SDLG in their fleet, and an entree there as well. So,
and to talk about your strategy towards the equipment rental industry, at the end of last year you sold the North American Volvo rents business to Platinum Equity. At the same time, a few of your dealers do still use the Volvo rents franchise and the branding. So I wondered what your strategy is towards the rental industry. Do you want your dealers to be rental companies in their own right? Do you want them to be suppliers to independent rental houses? Or do you see a space for a hybrid approach where they can do both?
We approach this market primarily with and through our distributors, the Volvo CE distributors. They in and of themselves typically have in-house rental fleets and or leasing companies to provide mid-term, long-term, even short-term rentals, rental purchase options, RPOs. In addition, we as Volvo sell through our dealers directly to the large rental houses as well. So we utilize both channels. But the traditional equipment distributor is increasingly becoming in the rental business as well. And we as the equipment supplier are very well aligned to support them in that process, not just for the right cost, benefit, spec, delivery, availability of product, which sometimes takes a different view, although there's some very high spec products, a lot of Volvo articulated haulers being in lease and rental fleets these days for some obvious reasons. But also as the Volvo Group, we have the good fortune to have invested very heavily in a financial services company, Volvo Financial Services, about $20 billion US portfolio today. When we utilize Volvo Financial Services, or VFS, to provide the liquidity to the dealers to finance their rental fleets. So they don't have to use other sources of liquidity, and likewise to provide the leasing. So to provide the product is one thing, but the rental leasing business is very capital intensive for distributors, and very much a demand coming from our customers, the end users, the contractors. So it's incumbent upon us as the value chain, OEM and distribution, to have the tools and the resources to provide this. It's a market segment that will be growing, is very profitable and value added for OEM distributor, and very important to the end user. So I think we will see more of this, and how it shifts to the emerging or less developed markets over time, only time will tell, but I think the trend will continue, globally.
Mm-hmm. Okay. Just one final area I'd like to touch on, and that's one of technology. There's a lot out there and a lot coming into this market that drives fuel economy particularly, and you're seeing hybrid machines, you're seeing different technologies being used in different ways, and diesel electric kind of applications being used more widely. From Volvo's point of view, are there any technologies that kind of look the most promising? I mean, if you're a gambling man, which technology would you put your chips on?
We take bets all the time on our view of the future, and and invest regularly and well, heavily into where we see technology going, not just where we see technology going, but where we see customer needs going based on not just technology first, but what does the customer want? And not in a position to share with you, obviously, our technological strategy, other than to say there's a lot of very exciting things going on in the industry, and we very much like our position as one of the key industry leaders in driveline technologies of many different types, focusing not just on fuel efficiency, but on safety, on noise, on vibration, things like this, operator comfort, connectivity. So there's a wide variety of aspects where we continue to invest and put significant advanced engineering and R&D dollars. And so as you said, each manufacturer has to be willing to take some bets, so to speak, and we've done that and will continue to do that. And many of those bets taken 5 years ago or generations ago by my predecessors at Volvo Construction Equipment have paid off well. So we have the ongoing responsibility to continue to take those bets on technology. And so let's speak again in 5-10 years and we'll show you how those bets have paid off.
Another important factor for the construction equipment industry is for the last 10 or 15 years or so, there's been a very, very heavy demand on research and development resources to meet the ever-escalating engine emission regulations. There's a lull in that now for a couple of years. So from a company like Volvo's point of view, does that allow you to bring new technologies to market quicker? Does it allow you, for example, to bring some of your R&D resource onto other areas and accelerate those programs? Or are there other factors that also have a large bearing on that?
Well, there's always limitations on how much any manufacturer in any industrial sector wants to spend or is able to spend on R&D. But again, we maintain our discipline of investing over multiple business cycles with a fairly long horizon. And while the emissions regulations for engines have, let's say, crested the tier 4, final, there's still many things coming. There's still not a lack of investment required for regulatory purposes on the technology side. It's not just the emissions, but again, there's vibration, there's noise, the different markets and different pacing, how we scale these out. So it wouldn't be accurate to say that all of that regulatory R&D spend is behind us. There's always a piece of this, but directionally you're correct. As a percent of total spend, whatever we choose to spend in a given business cycle, it's coming past its high point and allowing us to focus on that much fund, even that much more advanced engineering, emerging technologies, driveline technologies, but also really working on materials and taking these R&D dollars and our engineering excellence to engineer out cost out of the units to make sure that we are keeping pace and not just having the very high quality Volvo branded product with our brand promise, quality, safety, environmental care, but also making sure that we take the cost out to make it that much more of an attractive product for our customers.
Okay, well that covers everything. Thank you very much for your time. Really appreciate it, and thanks for sharing your thoughts with our viewers and our readers.
It's my pleasure. Thank you for your questions.
Thanks.